Hi, we've rated Beehive Fund MT Tower fractional ownership pre-leased opportunity where Beehive itself is the tenant as 5.95 on 10. Hi, this is Raj Shah.
Hi, this is Rishi Dedhia. We are from Invest in Pre-Lease. We help you profit from curated pre-lease proposals.
So today, what do we have on offer, Rishi?
We have one more fractional real estate proposal from a very new entrant in the market, and that's Beehive.
This is about an 85 built up square feet and all. The gross price is 15,635. When you do your legal costs, etc., the price is coming to 17,199 per square feet. This is an independent plot, which is a big plus. You can start with as little as 10 lakh of investment. And this is in Koramangala. So with that, we start with knowing your tenant. Rishi, what's your take on the tenant?
This asset is in the heart of the Koramangala, and so does the tenant is also heart of the Bengaluru. So we have Beehive, which is having a thriving business in Bengaluru. Beehive is again in the co-working space, as in the managed workspace business model, and they have been in existence since 2014. And they are one of the largest managed workspace owners in the industry right now in Bengaluru per se.
And oldest also?
Oh yes, oldest. So 2014, and if you look at those 2 years, 2012 to 2014, that's where the lot of managed workspaces started getting into operations and things started moving. But yes, so Bangalore and Beehive, they are very synonymous. They are one of the largest players, and that's the reason we have rated them 0.4 on 0.5. The only reason that we have taken away that 0.1 is because we have seen it is still stuck to Bangalore. They have a lot of potential to grow nationally as well. Coming to the next point that we have, that is whether this is a Fortune 500 global or India Fortune 100. Unfortunately, Beehive is not yet an entrant of India Fortune 100. That's the reason we have taken that zero. What's your take on the profitability and tenant industry outlook?
So profitability, they are profitable. We've got it on record from them. So we gave it a 0.25 on 25 there. In terms of the tenant industry outlook, we've discussed it earlier. Everybody in the flexi office space or the managed office space or the co-working space, it's a big plus. One is that people want lower capital cost on their property so they can deploy that money into their business. That's the economic reason. The other thing is that people want distributed offices. So today, Beehive is available in so many different locations in Bangalore that a company can tell their team members that you can work from any spot. So these are the flexibilities that they give. Also, while Beehive, the co-working bit is called Beehive, they have another brand called Honeycomb, which takes care of the managed office spaces. So our tally for the tenant comes to 0.9 on 1.25 because the tenant industry outlook, of course, looks good. So it gets 0.25 on 0.25 there. In terms of knowing the asset, Rishi, have you visited the asset and what do you think of the asset grade?
Yeah, we were in Bangalore 2 months back. That's somewhere in the first week of May. And we have visited this, and we will definitely rate this as a good asset because we are not grading it as a grade A per se, because this is at least a 7 to 8 year old construction which is there in place. It is constructed by Salarpuria. It is one of the marquee assets because of the location where it is, and it's a standalone structure. Looking at all these aspects that we have, it's a glass facade structure, of course maybe a 7 to 8 year old structure, but yes, it's a very well maintained and an independent road touching asset, and that's the reason we are going ahead with 0.3 on 0.5. Again, like I said, this is an 7 8 year old structure, and at that point in time probably IGBC was not that norm or probably a trend. This particular structure is not having any rating for now, and that's the reason it is going ahead with zero. Raj, what's your take on the OC, whether it has the OC and whether the property can be subdivided with an independent access?
So just before that, IGBC rating is the Indian Green Building Council. It's also equivalent to LEEDs, where fundamentally we want to see how many less resources the building is using, whether it's water management, getting power from solar, etc. So there it gets 0 on 0.25. Coming to what you asked me about, OC has come occupation certificate, but because this is like you mentioned, is an old building. So therefore, it gets 0.25 on 0.25 there. Can be subdivided with independent access. Absolutely. In fact, this is one of the key things, a great USP here. This is an independent plot. Now, the reason why we get very excited with an independent plot is because obviously it's your own property. Therefore, you can create independent access from the first floor to ground first, etc. Also, tomorrow, once the FSI increases, you have the potential of creating more floors or more space and then renting it out. So therefore, a property which can be subdivided with independent access, this absolutely fits the bill. So therefore 0.25 on 0.25 there. Rishi, what about the asset location?
Koramangala is considered to be one of the best locations of Bengaluru, and there's already a billionaires club that's existing in the vicinity. I would just want to name a few tenants which are there in the vicinity. So you have Flipkart, you have Wipro, you have Accenture, you have Toshiba. All these names are already existing in the vicinity of Koramangala. And the biggest element of this asset is basically right on the 100 feet main road, where you have that kind of frontage that you enjoy, where you have that kind of access. You have metro that's going to be right opposite to you. The station is probably in the 500 meters vicinity that's coming up. So all in all, if you look at this location, this is a location to keep. And as they say in the market, we went to a local who told us that you cannot get this kind of asset per se as fast or as easily as this one has come on the table right now.
What is the Billionaires Club?
Billionaires Club is basically, there's a locality where all the who's who of Bengaluru are staying, right from the ministers to secretariats to business billionaires like Nandan Nilekani. They are all in the vicinity, and that's why that particular region is called as Billionaires Club. And it is right stone's throw from the asset location. That's Koramangala. So all in all, we are happy with the location of the asset, and that's the reason we are definitely going with 0.75 on 0.75.
So that takes the tally to 1.55 on 2. And now coming to knowing the deal, in terms of the duration, it's a 10-year agreement. So therefore, it gets a 0.25 on 0.25 there. In terms of the lock-in, it's a 7-year lock-in. So therefore, 0.3 on 0.3 there. In terms of the penalty and corporate guarantee, currently it's on a letter of intent. The agreement is not out. So unfortunately, we can't give any marks there, including, like I just mentioned, because it's a letter of intent. Again, we cannot give it any marks. So we take away 0.5 there as well. Rishi, what about the increment and rent start date?
Great. The increment is 5% every year, and that is one good thing about this particular transaction. So again, like Raj mentioned, that we are yet to get confirmation in terms of the LOI getting converted to a agreement to lease or probably a lease deed. So as of now, as per the information that we have, we are definitely going ahead with that 0.5 on 0.5. But yes, we would definitely would want to wait for that agreement or the lease deed to come in and get, so that this thing also gets sealed. But yes, whatever information or whatever deck has been provided to us, it mentions that you have 5% increment year on year, and that's the reason we are going ahead with 5.5 on 0.5. The rent start date. This particular asset is in the process of getting funded, and Bhive is definitely going to do some of the work in terms of the fit outs and all. So all in all, what we have understood from the Bhive team is that the rent probably will start from December 2022. And that's the reason, again, we always keep mentioning that once you have a drawdown that happens and the investor's money is in, they would definitely would want to have returns. And since this is not fulfilling that criteria, we have taken away that 0.25, and that is why we've given a 0. Raj, what's your take on the deposit and the notice period?
So it's 3-month deposit, which doesn't qualify in our criteria because we need a 6-month deposit. So unfortunately, we have to take that 0.2 away. And in terms of the notice period, the notice period is 3 months. Again, if it's 3 to 5 months, we would have awarded it 0.15. And if it was 6 months, which is an ideal spot. Now, the reason why we want longer notice periods is because typically finding a new tenant takes time. And that's the level of comfort as any investor we would want. So therefore, unfortunately, we also have to take that 0.25 away there, and it comes to 0. So in terms of the deal, it's 1.05 on 2.5. And now, Rishi, kitna degi?
So we all are obsessed, and we keep reiterating this question, kitna deti hai? The reason is finally investor wants to know कि भाई अगर मैंने पैसा लगाया तो भाई ROI क्या है? Now what's ROI? Basically, ROI is return on investment, the rental yield that we call. And like we have always kept mentioning in all our reviews, that we have now stuck, and we are doing a net average ROI for the first 3 years as to understand whether tenant is actually going to stand, whether investor is actually going to stand here. So the net average ROI for the first 3 years turns out to be 7.1% for this particular asset. And that's the reason we have taken away the 0.25, and that's the reason we're giving this 0.75. Raj, what's your take on the tenant stickiness and the capital expenditure by the tenant?
Yes. Before that, what is the ideal ROI?
Yeah, we always stick to 8% and above as our ideal case for calculating the net average ROI for the first 3 years, because that's where I think the investor is going to make some money if the increment kicks in. And that's the reason we keep always 8% for getting that 1 point, complete 1 point. So what about tenant stickiness and the capital expenditure?
So tenant stickiness, basically these guys are paying about 102 rupees per square feet, and the range there is anything between 80 to going up to 100. So we would have ideally liked it to be lower than this, and therefore because the lower the rental, the higher the stickiness. So therefore we are awarding it half the marks, which is 0.25. And the capital expenditure, when Beehive slash Honeycomb takes it, they're definitely putting in money for the fit outs because that is their business model. They're going to take the place, make it ready as plug and play for their corporate clients, and then they're going to sublet it to those clients of theirs. So therefore, capital expenditure will be there, and which is an added advantage. Why this is important is because once somebody spent money at the premise, that's they have a lower propensity to leave that premises because they need to recover the cost that they've already put into this. So zero point 0.5 on 0.5 there. ROI, they get 1.5 on 2. And now coming to the asset manager. So Rishi, what about the asset manager? Have you met the co-founders that you guys always claim that you all will meet before working on a proposal of theirs?
Yes, we have met the team of Beehive, and we are fortunate enough to meet Shesh for a call as well. So we had a video call with them. We couldn't meet them when we were in Bangalore, but yes, they have promised us to meet whenever we are next in Bangalore. Shesh is basically a very known face in the Bangalore market, and he is considered to be one of the pioneers for co-working space, that is the managed workspace. If you ask him in terms of the tenants that are looking, or the industry, how it is opening up, he doesn't even need to blink an eye with regards to his data, with regards to his numbers. So he's that crisp and he's that spontaneous. You can see that passion in the way he's conducting himself. So all in all, we had a very fantastic interaction with them. Yes, Raj.
Are they funded?
Yes. So Beehive Fund has basically received commitments from two good names, for that matter, rather four good names. They have Nikhil Kamath, who is the founder. They have Abhijit Pal from Gruhas. They have Alok Bhatt, who's a CFO Adani Connex, and Sriram Reddy Wanga, founder of Cofluence. They also have some commitment from Bloom Ventures, which is also one of their institutional investors. So all in all, yes, the background is excellent. The team is excellent. The only reason that we have taken away that 0.25 is basically it's a fresh team and we are looking forward to them with regards to a lot of more info, a lot of more stuff. So that's the reason we want to give them that 0.25 on the initial interactions that we have done and the background that they have created. Rest, I think we will definitely look forward for their performance to come on board, and that's the reason we have taken that 0.25 from here. Raj, so I probably would want to take that in terms of asset manager is being profitable. Here, unfortunately, they are losing this 0.25 because this being their first asset that is going live, and they are yet to make a mark, and that's the reason they are yet to become profitable, and that's the reason they don't score here. Raj, what about client dashboard and profitable exit given to any of the assets?
So currently their client dashboard, again, because they are starting afresh, they have a lot of ground to cover in terms of getting these things ready. So their client dashboard is getting ready, we've been told. So when it is ready, we'll give them the marks. So currently 0 out of 0.25. In terms of profitable exit given, that's not possible. This is their first asset. So again, 0 out of 0.25. In terms of the total assets under management, again, it's all linked. It's their first asset. So therefore 0 on 0.25. Now the reason why this is important is we see that there is a learning curve. We've discussed this earlier. There's a learning curve when an asset manager is at 100 crores, 200 crores, 500 crores. Hopefully that learning and the interaction with their investors and channel partners and the entire, even peers for that matter, would ensure that they come to a position where the entire process is seamless. But to get there, it will take time. And obviously it does also mean investment in technology and people. So therefore, currently 0 on 0.25 there in terms of the total assets under management. In terms of the hurdle rate, they have a healthy 12% hurdle rate, which is excellent. And they will charge a 20% performance fee at the time of exit. So just for our viewers and investors, hurdle rate is basically a rate after which the performance fee kicks in. Let's say, for example, they get you a IRR or annual returns of 14%. And the hurdle rate is 12. So they're going to charge you 20% on that 2 rupees, which is 40 paise. It's a great thing because if the asset manager has skin in the game, in this case they do, then it means that they're going to be careful while selecting the asset. They'll also be careful at what price point they're getting. So all these things are very critical. And finally, Rishi, what is your 25 paise or 2 cents?
So I think all in all, we have been to the site, we have met the team, we have seen the asset. We feel that these guys are promising enough to come on board with regards to doing a lot of innovative work. They are actually veterans in the industry. That's how I would want to look at them. They have good control or command over the market. They know their numbers. So I'm sure future prospects look really good for them. With regards to our 2 paise or 2 cents, I think we would definitely say that we can look at giving them an opportunity to perform, and we can definitely look forward and expect a lot of stuff from them in the future. So that's the reason we are giving them 0.2. Raj, would you want to like to add anything to this?
So the thing is, after you vet them, we feel that their single strongest USP that came across was the fact that they know the Bangalore market so well, and they have a fantastic experience and hold on the market in terms of leasing it out. Now, please understand that this is very critical for any asset manager. This could be their single most biggest differentiator, and something that could snowball into something which is fantastic, because as of now, as we speak, current asset managers that are there in the market are building a team, a leasing team, so that if the current tenant leaves, they have to look for somebody else. But because these guys are already in the market and doing this on a regular basis since a very long time, that is their core strength. And which is why we think that in that it's a great USP to have, and therefore we are avoiding it 0.2 on 0.25. That 0.05 we have taken away because we are recapping this, but they will have to get a few tech things in place, etc. Because we've seen that the investor journey, right from the time they say yes to the time the investment happens, is there is a lot of communication, a lot of tech-enabled things that need to happen. And once all of that is in place, I think we'll be able to better that rating. So as of now, 5.95 on 10. I would also like to point out here that Beehive also has, this is their fixed fractional ownership opportunity. They also have a revenue share opportunity, which we are not reviewing, but there the yield is much higher. But again, the risk also would be higher. This is a pure fixed rental income opportunity, and that's what we are reviewing. With that,
Also, there is one more thing that the people should know, that, or the investors should know, that Beehive also has a sister concern which is taking care of the interiors of the premises. And they are quite active. The Beehive also has a fund that's going to come, which is going to be active in terms of taking up investments as well. So all in all, if you look at the combination is good because they have in-house teams. Of course, this a lot of investors will always have this question in mind that it's a double-edged sword, because at times you really don't know what's happening in the background. But looking at this team, we expect that there will be a lot of great results to look forward to. Yes, with that, like Raj said, 5.95 on 10. Yes, Raj.
yeah, so in continuation to what you said, a lot of people, when you initially speak about Beehive, they said that the asset manager is somebody who has a sister concern, which is also the tenant, right? Isn't that risky? Now, the thing is, please understand that the asset manager is separate. And when you're owning, once you invest, that company is independent of the asset manager. So let's assume, and this is true for all asset managers. So if the asset manager was to go bust for whatever reason, your entity does not get affected by that. It's a separate independent entity. And as a tenant, they are profitable. Beehive per se is profitable. So from that perspective, we have to understand that while they are all, Beehive is the going to be the asset manager and the tenant, we have to keep that in mind that these two things are separate and it's going to be independent of the asset manager, the private limited company that's going to come up. So with that, if you don't like the video, as usual, please comment and let us know. Please subscribe to our channel for future updates. And we look forward to your comments, whether you agree, disagree to the rating. If you think that we could improve our rating even furthermore, which I think we can, there is always scope for improvement. So please let us know. This is Raj Shah signing off.
This is Rishi.
Thank you.